welcome. I'm back from Germany, and I'll tell you what, I'm a little jet lagged. So let's go through the markets real quick. I made a comment off air prior to starting. I'm a little bit tired of stocks. I'm tired of stocks because I'm thinking that the market right now is starting to show wear and tear, and I'm starting to see some divergences. And if you take a look at the Russell, while we have not made a newer high in the market, the advanced decline and volume is starting to weaken. When we take a look at the comp index, bigger, newer highs in the NASDAQ composite index, but not with the AD line. That's getting a little scary. Volume, big rally last week, it blow off top. What I'm thinking is you got the short squeeze on, and they're nailing the bears. Looking at the New York Stock Exchange composite index, folks, this is not a very healthy situation. And so I'm stepping back. I think this is a rally to if we get a rally the next day or two, Tuesday turnaround. What I'm thinking, and even on positions on, and I know we just got into some positions with PA stock alerts. I'm thinking, to be truthful, cash in the chips on everything. I know Tom just got a position on Leggett and Platt and up a couple bucks and some other things. And I tell you what, things aren't jiving. And I think there is a disconnect between stocks' performances and the indexes right now. And it's more index being played rather than stocks being purchases. And that, to me, spells potential trouble down the road. We're up 26% year to date. And at this point in time, I think if we get that surge, and I've always stated in the last few weeks, you may recollect, the Dow Jones Industrial Average is so darn close to that 16,000 number, it would be hard to imagine it not getting there. And so here we are. I think it's a round number. They want to get there. The volume's worrying me on the Dow, though. There's no volume behind this, looking at on-balance volume. Look at the advanced decline. The advanced decline, this market's broken out, and on a daily basis, it too hasn't broken out. So it stands a very strong chance of forming bearish divergence once they possibly just hit the short squeeze and trade 16 and get everyone excited. Credit call spreads are in the works for this week is my theme, and then I'm going to take that premium instead of looking for a small profit. I'm going to finally take some of that premium and use it to work for buying some out of the money, lower delta, more time put options. So I'll be looking for like maybe a 37 or 40 delta for the January expiration. I'll be looking at selling on a rally on strength if the volatility, depending on what we can get. I'm looking for a strategy of taking in some credit call spreads and using that money to help finance a longer term put, or at least the next the January expiration. I'm a little bit nervous on this rally up in here, and I just think that there's a lot of complacency now more than ever. I mean, we really haven't been, I thought we would see some sector rotation. I've been keeping you guys on the clean and narrow. I thought we would see some sector rotation in the Qs. We got the credit call spreads there. We took profits. We warned you about it. We tweeted it. And now the market's kind of come right back up into this area. When we look at the Qs, advanced decline, because it's only in the NASDAQ 100, has broken out. It did break out with strength, so they came right back into the game. But they just, this whole time, we just saw them come out of this market and into other areas, and now they're coming back into technology a little bit based on the NASDAQ 100 information using advanced decline and volume. But the volume with the rally isn't as strong as one would suspect. So for me, as we near closer to the quarterly pivot resistance, so, oh, by the way, I'm looking at a move in the British pound here. If we take out, this is a buy signal, either look for a pullback or look for a continuation move to the upside in the pound. The pound has been outperforming relative to the euro, and I think you got a potential nice move. You're in a 15-minute, you're in a 60-minute, a 30-minute high close doji, and your next plan of attack is around 61.5 or so. and then we'll take a look at that after we see some nice volume, the market trending up with good acceleration of volume. And then after that, we got from 161.5, the next level is 62.47. So you day traders and short-term traders can look at the long side of the pound, okay? By the way, this was the looking at when I was in Germany, I was looking at the right before I started at the ripe old hour. I think this was at, let's see, 10:30. Yeah, the market had already formed like a nice little sell signal, and it just stopped. It just dove. And then finally, when it generated a market buy signal, it was time to get off the stage. So in any event, Germany was cool. I missed taking the first place spot by, I came in second by $63, not euros, $63. I think one guy, the other guys didn't, they didn't, I think they just gave him some dignity. You know, they didn't really talk about what their exact cash loss were. But the guy, it was, if you look at the photos on the video last night, or we put on the blog, it's a great little article. It was the guy next to me. He was trading, you know, he was doing scalping techniques, 2-3 ticks here and there, and he was just in and out really quick on the Forex. He was trading micro, I think, 10 lots and trying to scale. But overall, he did take me out by $63. But in any event, it was a tough time to trade, but we did the best. And I'll tell you what, there's a chance to actually lose money there, you know, which brings me to the moral of the story. Got to wait for the setup. Got to wait for the right trade. All right, so what I wanted to bring to your attention was the ES. You guys saw the page on, at least you got an idea of taking a look of the pound chart. So we got the technique we taught, we got the British pound, and now this is on balance volume. So here's my little concern. This is the S&Ps. Here's on balance volume. So the market has made from a close, and there's the opening bell. All right, so I get it. We've opened. I got it. We got it. All right, so the market's generated a significant higher high, and we are moving, and as the S&Ps move closer in on that 1800 number, that's the quarterly resistance, but the volume showing bearish divergence on this huge significant rally for like the first time that I've ever seen, and that's why I'm a little bit nervous. So 26, 27% in the S&Ps, just the opposite of this breakdown candle. You probably want to pay attention to strategies, I would say. So like, for example, today, this is a 15-minute chart. Today, tomorrow, something like that. The market here, the buy signal that generated a buy signal and it went up. If this buy signal fails, watch for breakdowns below 95.5. Some people will be eyeing that swing low right there. If the market breaks down below that swing low, it's probably going to bring in some sellers, because if you recall, if I bring in a trend line here we go, you'll notice that it actually is closer. This area is a swing area. It brings into consideration of this high right there. So for sellers, if this thing's going to fail, okay, there's several spots that I think you want to focus in on. These lows right in here. So I'm not sure how much higher the market can go, but I'll tell you what, I'll be focusing on some sell signals up here, and I'll be focusing, and I'm really hoping to see this thing get up to over 18,000. Just get it over the way, or 1,800, excuse me. Get the S&Ps up to 1,800, get it out of the way, and then look for a correction of meaningful proportion. I'm not talking 2-3% in the indexes. I'm talking maybe 5 to 8%. That's what I'm talking about. So that's the message I wanted to quickly bring up. There's really not a lot of stocks that I would like to focus in on today's planning and scanning. What I'd rather focus in on is to teach you guys what to look for, breakdowns in the market, watch the volume, watch the divergences in the advanced decline, because I definitely see a little bit of complexity and some shifts in the market that are indicating to me for the first time in a long time that we could finally be wearing out the welcome on this rally, especially as we start to close in on the diamonds or the Dow close to that, as you can see here. I'm so sorry, folks. We're sleepy. We're still a little jet lagged. There we go. The 16,000 level. There's the monster. So even my histogram component is starting to show a little bit of divergence. This market is again, this is a monthly chart. Look at that. It's definitely showing, and I know the month's not over, but some of my higher degree technical indicators are reflecting bearish divergence patterns on a longer term scale. So I just want everyone to be a little bit cautious. I think that if we do get a correction in the market, it you know, if we got let's say 5%, that would 5% would put you around 15.2. So I'm not sure how much higher it goes, but a 5% correction puts you at 15,200. Whoopee-doo, right? So it's still bullish, but it could get ugly if you, especially if we start talking about planning and scanning and buying stocks up in here. So that's why today's presentation is not geared so much towards looking at long entry on stocks as much as taking advantage of selling into this strength if you are long the market. So I just hope the S&Ps, thanks Steve, yes, you can see that right here. I've got the high of 17,990. Amen, the S&Ps. Cash market. So they've gotten their wish. The cash spiders, 1841. And look at this, guys. Look at this. Just that you can see. The monthly on the cash market. We're hitting the monthly, we're hitting the quarterly, and I think this is a time to take some type of proactive stance in the market. So that concludes planning and scanning. I know this was a little bit different than what we're normally used to, but I think it's kind of like I'm hitting the flare gun, baby. I'm hitting the flare gun. Okay, so that means that we'll probably see maybe support in if the market's going to be worried about the economy, if the stock market's worried about things, then what do you see? You see dollar weakness. And today, look, the dollar's red a little bit. The British pound is breaking out a little bit. You're starting to see currencies move up. If that's the case, then we're going to go back to the fearmonger markets, back into bonds. And one of the things that concerns me as well is that if the stock market is so strong, then why are the bonds on the green side? You know, the daily bond market, we should have seen the market down, not up. If they're really convinced the stock market is crashing, burning, and diving. So with that said, gold should probably have been, by the way, at around 1250, and it's not. We formed a doji last week. It gives me concern that the market's just stalling in here. So with that said, I've got some stuff that that just things aren't equaling out, and I think it's time that we take definitive action. And I just think that this plan of attack, or at least this trader here, I'm looking at credit call spreads, but this time I'm not just looking to bank a couple bucks. I'm buying out of the money 30, 40 deltas with the January expiration because I'm looking for that 5% move. I hope that helped everybody, and I hope this recording gets out in a timely nature. So with that said, everyone have a great trading week. I'm not sure how many people are coming out to visit us in Las Vegas, but we are going to be in Las Vegas. And if you go and look at your emails or go visit our blog site, actually on Twitter, we put a nice little piece on Twitter that showed the, I'll just bring it up so you can see. If you go to Twitter and you go here to click on that link, it was in the video, but you can kind of read what we were talking about and a nice little refresher on what the heck the high close doji is. And that was actually in their magazine from that article or interview. And remember, the high close is the opposite of the low close. And anyway, so there's yours truly. This is my TradeStation account. Then this was, I mean, it was just like a little pressure, you know, up against some guys. They weren't those particular individuals, except for the guy next to me. This guy right there, he's a pretty neat guy. This guy was a nice guy. He came up to me afterwards. I didn't really have a chance to interact with these two guys at all. They didn't look, they looked too focused. And they seem to be very respectable and nice guys as well. So in any event, this was the setup I took. You know, as you can see, low close doji. You got to take low close dojis in competitions. Otherwise, why go? So anyway, as far as other markets, I just wanted to also mention to keep it real with commodities and keep focused. Corn. Corn is a market that I'm thinking I'm hoping to see a little bit lower. We get this liquidation as we get out of November and into December, and they liquidate and they get into farmers looking to raise some cash, big crop. Once we get down to that 380 area on the March basis, March contract, because remember, we got to roll over in 2 weeks from December to March. We want to be looking at picking up some long positions down there. In the meantime, watch these AD and watch these volumes and keep, I think the important thing is that if this market, if the Russell starts to maybe tip its hat, make a new high, if it makes a new high, just barely makes a new high, and we don't take a breakout on our advanced decline, we got bearish divergence. We want to watch this by like Tuesday, Wednesday. So I'm setting you guys up to pay attention. We could see something significantly. I think this next time that we see a pullback, it's not the pullback you want to pipe brakes unless we get like maybe a 5% correction. We got to monitor it on the way down. So don't be picking a bottom there saying, oh, look, it's a pullback. Let's get long now. That I think might be a mistake. Anyway, so that's what my longer term research and work is saying. So we are sounding the gun. We're pulling the plug, and we're being very cautious up in here. So with that said, everyone, I hope you have a great week. I'll see you. If you're coming to Vegas, come see us. We got a booth. We're going to be speaking and doing a trading challenge there as well. So it'll be kind of cool. You guys be good. Have a great week, and we'll see you back here in a week, and we'll be popping in the room as time permits. Thanks, everyone.